Hi, it's Andy Hoffman, Media Director of Miles Franklin Precious Metals, in our 25th year in business. It's midday, Thursday, September 5th, and today's audio blog is titled Combining Cataclysmic Forces, which, considering this morning's ECB surprise rate cut and potential war breaking out in the Ukraine, I think is a pretty appropriate title. Now, it's hard to believe that I was once a bright-eyed, idealistic Wall Street analyst, believing wholeheartedly in the American dream. Sadly, that person lives two decades in the past, and today, working for the antithesis of Wall Street, in many ways as a de facto whistleblower, I cannot be less optimistic of America's future, or for that matter, the tradition-steeped European continent, or the home of the Japanese economic miracle I spent college learning about. Today, the world's economic future lies with China, Russia, and their growing bloc of economic and likely military allies, whilst the West dies a slow, painful death of its own hubristic making. Frankly, it's awe-inspiring to consider that the pathetic Soviet Union of my youth, mocked and dominated by American financial might, is not only on the verge of usurping America's global political leadership, but leaping past it as it accumulates the very gold America once owned. Here at the Miles Franklin blog, it saddens us to speak to no end of the truth of a shifting global economic and geopolitical paradigm in which the almighty U.S. is moving in the wrong direction, and the almighty dollar doomed to lose the reserve currency status that has enabled Americans to live way above the standard of living they deserve. With each new audio blog, an additional week has passed, putting us that much closer to the inevitable endgame of cataclysmic global fiat currency collapse. Today's version may be one of the most important yet, as not to toot my horn, but just 2 days ago, my article was titled Thursday's ECB decision could destroy Europe if Ukraine doesn't first. And here we are Thursday morning, and not only did the ECB shock the financial world by taking rates further into negative territory, but just an hour later reports of aggressive warfare in eastern Ukraine have even the heinous gold cartel on the run. Watching the U.S. Treasury bond bound around like a 1999 internet stock, buffeted by a collapsing global economy, massive Fed intervention in both directions, and exploding geopolitical fears should tell you all you need to know about how utterly broken the worldwide financial system has become. It's only a matter of time before something truly horrific, on a scale combining the geopolitical impact of 9/11 and the financial impact of 2008, permanently changing the world as we have known it. And when it does, countless millions, and potentially billions, will know the fear of living in terrifying environments like the 1930s in America, the 1940s in Europe, and if hyperinflation sets in, the 1920s in Germany. Let's start our weekly financial forensics with the pink elephant in the room. That is, the biggest financial market bubble in human history. Until this year, I resisted such a notion, knowing full well the global economy was worsening with each passing day, and stock market volumes at multi-decade lows due to full-scale retail abandonment following the financial calamities of 2000 and 2008. However, with the initiation of Abenomics, QE3, and Draghi's whatever it takes initiatives 2 years back, coinciding with the most blatant, heinous precious metals attack since 1980, it became crystal clear that, inadvertently or not, the 1% pulling the strings had created such an ugly environment of moral hazard and upside-down economics. It was inevitable that the world's institutions would hyperinflate every financial asset in sight until, equally inevitably, said bubble would collapse into shocking real losses, to not be recovered for generations. To wit, the investor's intelligence bull-bear ratio, and if a more blatant oxymoron exists, please let me know, is not only at an all-time high, but a whopping 20% above the Fed-inspired 2007 mania, and 50%, yes, 50% above that at the top of the historic 1999 internet bubble. The European and Japanese economies have not been in worse shape in our lifetimes, but both feature soaring stock markets, care of not only history's loosest monetary policies, but the fact that central banks are buying stocks hand over fist. In the Bank of Japan's case, overtly. Valuations have now succeeded all historical highs, and this with looser accounting standards than ever before. Not to mention, amidst a largely contracting global economy and extremely low-quality earnings, bolstered dramatically by stock purchases funded by central banks' excessively loose monetary policy. But sadly, today's equity valuation anomalies don't hold a candle to the horrific distortion of bond markets, as nearly all Western sovereign bonds are trading at record low yields amidst their government's collectively worst financial condition in decades and highest debt loads, expanding at parabolic rates no less, of all time. Throw in the most terrifying pervasive geopolitical fears since World War II, and currency volatility mirroring that of the most speculative stocks, and in a free market we would most definitely experience record high rates, not record low. And worst of all, the longer this paradoxical situation endures, the more likely the global economy will worsen and monetary policy loosen, thus accelerating the inevitable end game of global fiat currency collapse. Yesterday, my article was titled East to West Global Economic Collapse, following the previous day's European economic collapse in simple math. In both cases, I quantitatively demonstrated how essentially every nation, from China to Japan to European leaders like Germany and France, are amidst expanding irreversible contractions that must yield exponentially increased stimulus to maintain the monstrous Ponzi schemes their unbacked currencies have created. And in the aforementioned Thursday's ECB decision could destroy Europe if Ukraine doesn't first, I noted that a series of geopolitical black swans threaten to take the whole routing system out themselves before it even has the opportunity to collapse of its own weight. Over the Labor Day weekend, I pondered long and hard the myriad inputs I had digested throughout this year plus of manipulative hell, with everything in my being telling me this fall will commence its end. Whether one views the aforementioned global economic collapse, surging social unrest and geopolitical tensions, exploding money printing, historic financial bubbles, record physical gold and silver demand, plunging silver inventories, particularly in China, the near collapse of the global precious metal mining industry, the weakest Western precious metal sentiment in memory, or the most bullish long-term gold and silver charts imaginable, it became quite clear that now, amidst market's most fearful time of the year, the odds of breaking the post-2011 cartel stranglehold was at hand were very high. Thus, it wasn't entirely surprising that the powers that be started the fall season by not only viciously attacking gold and silver on Labor Day Eve, but goosing the all-important 10-year Treasury yield back above its current 2.4% line in the sand. Sure, global yields, as I write, have plunged to record levels since, with most of Europe now trading at negative yields, including some of its most insolvent pigs. And sure, fighting has again expanded in the Ukraine, threatening the onset of World War III, while heck, today's ADP employment report was well below expectation. Irrespective, the powers that be realized they must maintain confidence by manipulating every imaginable piece of economic data, financial markets, and perception tools imaginable. Most importantly, the financial world's Achilles heel, physical gold and silver. Yes, the ADP report came in well below last month's disappointing level, and given that its overarching goal has become to goal-seek the BLS's fraudulent methodologies, the odds are tomorrow's NFP report will be a disappointment as well. That is, on the headline level, as the internals are guaranteed to be a disappointment no matter what the headline jobs and unemployment rate numbers are. This month alone, roughly half the projected jobs will be due to the phantom birth-death calculation. And moreover, you can take it to the bank that whatever is left over is dominated by part-time, minimum wage, non-benefits paying jobs for people aged 55 and over. I see that another widespread fast food workers' strike started today, where thousands of poverty-level workers believe the minimum wage should be doubled to help them make ends meet. In other words, not only does the BLS now count part-time jobs as the equal of full-time jobs, but such part-time jobs only pay half of what is needed to pay the bills. Better yet, the government has published a series of bullish diffusion indices this week in their all-out desperation to whitewash the reality of a weak economy with the lies that such data portray, which, by the way, even the largest too-big-to-fail Wall Street banks admit are tenuous at best. This morning, the ECB supposedly shocked the financial world, shocked being Zero Hedge's own word, when it reduced its key lending rate from an already pathetic 0.15% to 0.05%, and its deposit facility rate from negative 0.1% to negative 0.2%. The euro promptly plunged below 1.3, following the yen's plunge through 105 a day earlier. This is decidedly not a case of a strong dollar, as the moronic MSM will have you believe, but a growing consensus of massive QE to infinity in both the dying European continent and the land of the setting sun. Lest anyone believes all's well in America, there's a reason why rates are nearly at their own all-time lows, and that reason, for what we wrote first of in May, is the most damning proof yet of QE failure, i.e., plunging rates amidst a so-called recovery. Sure, the Fed has managed to manipulate the 10-year yield from the low 2.3% range last week to the low 2.4% range today in an all-out desperation effort to prove America's economy can somehow soar whilst the rest of the world collapses. However, like all the power that be's manipulations, utilizing history's most powerful relentless manipulation technologies, it too will fail, likely much sooner than most can imagine. And by the way, a full-scale war does in fact break out in the Ukraine, Iraq, Syria, or elsewhere, all bets are off. Bill Holter wrote earlier this week of leading governments like the U.S. seeking something to point at to blame the inevitable global economic collapse on, and thus the odds that they want such wars to commence and perhaps will have a hand in catalyzing have never been higher. Consequently, we cannot be more vehement in our belief that this may be your last chance at financial survival. And for those taking the initiative to protect yourselves with physical precious metals, we hope you'll call Miles Franklin at 800-822-8080 and give us a chance to earn your business. Don't forget, we publish, in my view, the industry's best daily economic and precious metals newsletter, and do it for free. Between myself, David Scheckman, and Bill Holter, you will learn more about what's really going on in the world than anywhere else I can comprehend. Not to mention the 3 to 5 podcasts we tape each week, which are also available for free in real time at milesfranklin.com. As for Miles Franklin itself, our 25 years of experience should comfort you that not only will our prices be competitive, but our service the industry's best. Moreover, we operate what I believe to be the industry's best international storage program with Brink Security in Montreal, Canada, which in the next week or so we expect to publish exciting new developments about and perhaps produce a dedicated audio blog about. And as always, you can contact me with any questions you might have at ahoffman@milesfranklin.com. Thanks and have a great weekend.